Mortgage. Death, pledge. That's what the word mortgage means. It comes from two old French words that entered English law in the 12th century. Mort, death. Gage, a pledge or a wager, a death pledge. You signed one. Your parents probably signed one. 84 million American households are currently bound by one. And nobody, not the bank, not the broker, not the closing attorney who watched you initial 47 pages, told you what the word actually means. I didn't find this in a conspiracy forum. I found it in Blackstone's Commentaries on the Laws of England, published in 1765, the most influential legal text in American history. The same text the Founding Fathers studied. The same text still cited in Supreme Court decisions today. Blackstone explained the term plainly. The property is pledged upon condition of death. If the borrower fails to pay, the land is taken and is therefore dead to them. If the borrower does pay, the pledge itself dies. Either way, something dies. That's the deal. That's what you agreed to, and once I understood the word, I had to understand the system it replaced. Because Americans didn't always buy land with death pledges. For most of this country's history, they didn't buy it at all. They held it. Outright. Unconditionally. Under a form of ownership that most Americans have never heard of because it was quietly removed from common practice during the same decades that keep appearing in everything I research. Let me explain. There is a legal concept called allodial title. It comes from the Frankish word allod, meaning whole property. Under allodial title, the owner holds land absolutely. No rent owed to a lord. No tax owed to a crown. No obligation to any institution, government, or bank. The land is yours the way your body is yours. Completely. Unconditionally. Without ongoing permission from anyone. This was not theoretical. It was the foundation of property law in the original 13 colonies the Virginia Charter of 1606 granted. Settlers' land to be holden of us in free and common socage only, and not in capite. Legal language meaning the land was held directly, without feudal obligations to the crown. The Massachusetts Body of Liberties in 1641 stated that every inhabitant who is a householder shall have free fishing and fowling in any great ponds, bays, coves, and rivers so far as the sea ebbs and flows, within his property. Language of absolute dominion. William Penn's Frame of Government for Pennsylvania in 1682 created a system where settlers received land in fee simple. The closest English common law came to allodial ownership. And here's what the textbooks skip. In colonial America, property taxes, as we understand them, did not exist. Taxes were levied on transactions, on imports, on specific commodities, not on the act of sitting on your own land. The Bureau of Economic Analysis, in its historical tables, confirms that property tax as a consistent annual obligation did not become standard across all states until after the Civil War. Before that, you could own land, build a house, farm it, pass it to your children, and never owe a recurring fee to any government for the privilege of keeping what was already yours. Think about what that means. A farmer in 1820 who cleared land, built a cabin, and planted crops did not receive an annual bill from the county. He did not need to generate cash income simply to retain his home. He could live entirely from what the land produced. Not comfortably, not easily, Subsistence farming was brutal, but he could not be removed for failure to pay a recurring fee on property he already owned. This is the world the word mortgage was designed to replace. The Carpenters Company of Philadelphia, the oldest trade guild in North America, founded in 1724, built Independence Hall, Carpenters Hall, and dozens of the finest buildings in colonial America. Their members operated under the guild system. They were paid through a combination of fair pricing, barter, and extended community credit. A master carpenter might build a family's home and be paid over 2 years in provisions, timber, and reciprocal labor. No bank sat between builder and client. No interest accrued. The arrangement was face-to-face, and the community enforced it. The Bureau of Labor Statistics, in a 1928 report on colonial wage systems, described it this way: a system of barter existed throughout the first century of settlement, and the very scarce currency was little used in the payment of wages. Face-to-face arrangements helped bind the community together. That binding is the part that matters, because what replaced it was not community. What replaced it was contract. What replaced it was mortgage. What replaced it was death. May 20th, 1862. President Abraham Lincoln signs the Homestead Act. The promise is extraordinary. 160 acres of public land, free to any adult citizen who files a claim and works the land for 5 years. Filing fee, $18. This is the most generous land distribution program in American history. It is taught in every school as proof that America offered opportunity to anyone willing to work. But the National Archives, in their own summary of the Homestead Act, states the problem plainly. Comparatively few laborers and farmers could afford to build a farm or acquire the necessary tools, seed, and livestock. Historians estimate the true cost of homesteading at between $1,000 and $2,500 in 1862 currency. Adjusted for inflation, that's roughly $40,000 to $60,000 today, for people earning $1 a day. Free land you couldn't afford to use. A gift you had to go into debt to open. 9 months later. February 25th, 1863. Lincoln signs the National Currency Act. It passes the Senate by 2 votes, 23 to 21. The act creates the office of the Comptroller of the Currency and establishes the first national banking system. The stated purpose, confirmed by the Federal Reserve's own historical archives, was to help finance the Civil War by increasing demand for federal government bonds. National banks were required to purchase Treasury securities equal to 1/3 of their capital. They received banknotes in return worth 90% of the bond value. To issue more money, banks had to buy more government debt. In 1864, a 2% tax on state banknotes began driving local currencies out of circulation. By 1865, a 10% tax destroyed them entirely. In the space of 3 years, the federal government offered free land that required borrowed money to develop, created the banks to lend that money, and eliminated the local currencies that had allowed communities to function without those banks. I'm going to say this carefully, because I know how it sounds. The Homestead Act was the lock. The National Banking Act was the key. And the door only opened one way, toward debt. Maybe that wasn't intentional. Maybe 2 pieces of legislation passed in the same window simply addressed different problems simultaneously. Maybe the timing was coincidence. But the death pledge was waiting on the other side of that door. And once American families walked through it, very few of them ever walked back. Here is where something genuinely disturbing emerges. In 1868, the 14th Amendment to the Constitution was ratified. Its primary purpose, ending the legal framework of slavery and establishing equal protection under law, is well documented and historically significant. I'm not disputing any of that, but the 14th Amendment also contained a clause that legal scholars have debated for over a century. Section 1. No state shall deprive any person of life, liberty, or property without due process of law. That phrase, due process of law, became the legal mechanism through which states established their authority to tax property on a recurring, annual basis. Because the amendment didn't say states couldn't take property. It said they could, as long as they followed due process. And the due process they developed was the property tax assessment. By the 1870s, state after state had implemented annual property taxes as their primary revenue mechanism. The National Bureau of Economic Research documents this shift as occurring primarily between 1865 and 1890, the same window. Always the same window. What this meant in practice was devastating and simple. For the first time in American history, keeping your home required earning money. Not once, at the point of purchase. Every single year. Forever. A farmer who grew everything his family needed, who traded with neighbors, who owed no bank and no merchant, now owed the county. In cash. Every year. And if he didn't pay? Due process. The county could, and did, seize the property and sell it. The Bureau of the Census records show that tax sales of property became epidemic in the 1870s and 1880s, particularly in the South and Midwest. Families who had lived on the same land for generations, land that had been cleared by hand, built upon with guild-trained skill, land that had never carried a mortgage, lost it because they couldn't produce cash for an annual bill that hadn't existed when they built their homes. This is the moment allodial ownership died in America, not through a single dramatic event, through a tax bill, through a recurring obligation that transformed land ownership from a permanent state into a subscription service. And into that void, into the sudden, desperate need for cash that millions of Americans had never needed before, stepped the national banking system. The banks that had been created 9 months after the Homestead Act. The banks whose reason for existence was to create buyers for federal debt. Now they had customers. Millions of them. Farmers who needed cash to pay taxes on land they already owned. Homesteaders who needed loans to develop land they'd received for free. Workers who'd been pushed off subsistence farming and into wage labor because staying on the land now cost money they didn't have. The death pledge had found its market. I want to be fair here. I keep asking myself if I'm building a narrative where there's only chronology. Maybe property taxes were a necessary evolution. Maybe a growing nation needed centralized revenue. Maybe annual taxation is simply more efficient than the patchwork of tariffs and transaction taxes that preceded it. But then I look at what exists today, and the fairness becomes harder to maintain. The average American mortgage in 2024 is approximately $244,000. At current interest rates, the total amount paid over 30 years is approximately $480,000 to $520,000. The borrower pays roughly twice the value of the home. The additional $240,000 to $280,000 goes to the bank as interest, money generated from nothing, charged for the service of lending money the bank itself created through fractional reserve. Lending. That's the modern death pledge. You pay twice. The bank creates the money from a ledger entry, and if you stop paying, the property you've already half purchased reverts to the bank, which sells it and lends it again. The pledge dies. You lose. But even if you complete the death pledge, even if you make 360 monthly payments over 30 years and receive your deed, you still don't own your home the way a colonial farmer owned his land. Stop paying property taxes. See how long you keep it. In every state in America, failure to pay property taxes results in eventual seizure and sale of your home. The timelines vary, the process varies, but the outcome is universal. You do not hold a allodial title. You hold fee simple title, which means you hold the land subject to the government's right to tax it indefinitely. You are, in the precise legal sense, renting your home from the county. The mortgage pays the bank. The property tax pays the government. And if either payment stops, you discover who actually owns the property. It isn't you. It was never you. The word told you that from the beginning. You just didn't know what the word meant. There is one community in America that still operates close to the old system. The Amish. They build homes with community labor, barn raisings that finish in a single day. No contractor, no bank financing, no 30-year mortgage. They pay for materials with shared community funds. Their health care operates the same way. When a family faces a medical bill, the community covers it. No insurance company, no bureaucratic intermediary. Direct obligation between people who know each other by name. But they still pay property taxes. They have no choice. And they had to fight the federal government for years just to maintain their exemption from Social Security, a system they view as commercial insurance, which their faith prohibits them from purchasing. Congress finally granted them an exemption in 1965. They must file IRS Form 4029, Application for Exemption from Social Security and Medicare taxes, and waive all benefits. They pay every other tax. They simply refuse to participate in the death pledge economy. And they had to petition the federal government for permission to refuse. That single fact should make you pause. A community that builds its own homes, grows its own food, provides its own health care, and carries no debt had to go to Congress to be allowed to continue doing so. The old system didn't die because it failed. It died because it was made illegal. And the people who still practice it need a federal exemption to survive. I keep coming back to the word. Mortgage. Death pledge. Not home loan, not property financing, not any of the soft, neutral phrases the industry uses to describe what you're signing. The original legal term, the one Blackstone used, the one the English courts used for centuries, the one that still appears on the document you signed, tells you exactly what it is. Pledge secured by death. Something will die. The debt or your ownership. Those are the only two outcomes. The language never lied to you. It was just never translated. And the deeper I look, the more I notice how many financial words carry ghosts like this. Stock, a stick of wood. Bank, from the Italian banca, the bench where medieval money changers sat. Interest, from the Latin interesse, meaning damage or loss. The borrower pays interest because the lender is being compensated for the damage of not having their money. Mortgage, death pledge. Interest, damage payment. The vocabulary of modern finance isn't neutral. It's a fossil record of what the system was designed to do. The colonial farmer who held his land allodially didn't need this vocabulary. He needed no word for mortgage because there was no death pledge. He needed no word for interest because there was no damage to compensate. He needed no word for foreclosure because no institution had the right to take what he held outright. He had a word for home. And it meant something different than it means now. It meant a place that could not be taken. A place that didn't require monthly permission to inhabit. A place where the only obligation was to the land itself and to the neighbors who helped you build on it. We don't have that word anymore. We have mortgage. We have interest. We have property tax. We have insurance. We have a stack of obligations that begin the moment we stop paying and don't end until we're dead or until we've paid twice what the home was worth. Mortgage. The word remembers what we've been trained to forget. The language preserves what the textbooks erased. And every month, when you make your payment, you are honoring a death pledge in a language you were never taught to read. I don't have answers. Only the word. Only the pattern. Only the ghost of a system that let people own their homes outright, and the death pledge that replaced it. The documents say nothing failed. The buildings made under the old system still stand. The Amish homes built without mortgages are as solid as anything a bank ever financed. The only thing that changed was who profits. And once you hear the word, once you know that mortgage means death pledge, you cannot unhear it. Not the next time you write that check. Not the next time you drive past a bank. Not the next time someone tells you that homeownership is the American dream. The dream has a name, and the name means death.